Hello and welcome. So, if you own an electric car, or you're even just thinking about getting one, you need to listen up. The financial rulebook is being completely rewritten. The latest UK budget has drawn a brand new map for EV taxes. And honestly, understanding these changes is absolutely critical.
And to make sure you get the best information, we've teamed up with the people who live and breathe this stuff. This entire briefing has been put together by the specialist team at My Tax Accountant. They've gone through every single line of the new rules to give you the clearest possible picture of what's coming. All right, let's just get straight to the point. The single biggest headline is this: the era of totally tax-free electric motoring, it's over. But hey, don't panic. The key here isn't just knowing you'll have to pay. It's about understanding exactly what you'll pay, when you'll pay it, and how you can still make sure an EV is the smartest financial choice you can make.
Okay, so here's what we're going to cover. First, we'll look at the big why the rules are changing in the first place. Then, we'll dive into the immediate hit on your road tax. After that, we'll gaze into the future of road pricing, check out the valuable incentives that are still on the table, round up all the key numbers, and finally, talk about your expert next steps. Ready? Let's get into it.
So why now? Why is all of this happening? Well, it really boils down to one simple thing: money. You see, as more and more of us make the fantastic switch to electric, the government's income from fuel duty, that tax on petrol and diesel, is just falling off a cliff. We're talking about a massive £13 billion hole in the budget. So these new EV taxes are simply the government's way of plugging that gap for the future.
Right. The first big change is literally just around the corner. It affects what we all call road tax, or to be official, vehicle excise duty. You'll hear it called VED. From April 2025, that £0 road tax, which has been a massive perk for EV owners, is being scrapped.
Now, this slide is really interesting because that date, April 1st, 2025, is a hard deadline. It basically creates two different classes of electric cars. If your car is registered before that date, you're in one boat. If it's registered on or after that date, you're in a completely different one. And as you're about to see, the differences are, well, they're pretty significant.
So let's break down these numbers. If you buy a brand new EV from April 2025, your first year of road tax will be a tiny £10. After that, though, it jumps to the standard rate of £195 a year. And if you already own an EV, well, you'll start paying that £195 from your next renewal after April 2025. But look at that last column, the expensive cars supplement. This is the big one, permanently exempt for older cars, but it applies to new ones. That's not all. Here's where most people go wrong.
Right, this expensive car supplement, some people call it the luxury car tax, is a really big deal. Pro tip, listen closely to this part. If your EV is registered before April 2025, it is permanently 100% exempt from this extra charge, forever. But for cars registered after that date, it kicks in if the list price is over the new £50,000 threshold. That's an extra £425 a year on top of the normal road tax for 5 years. Let's make it real. Imagine Sarah, a freelance designer in London. If she buys her Tesla Model Y in March 2025, she saves £425 every single year compared to buying the exact same car just 1 month later. That's a saving of over £2,000. It's a huge difference.
Now let's look at the next step. If VED is the change that's right in front of us, the long-term plan is a pay-per-mile system. And stay with me. The next point might surprise you because it fundamentally changes how we all pay to use the roads.
This new system is called Electric Vehicle Excise Duty, or EVED. And you see those two words in capital letters? In addition, they're probably the most important words on this slide. This is not a replacement for the standard VED we just talked about. From April 2028, you're going to pay both. It's a huge shift from taxing you for owning a car to taxing you for actually using it.
So how much is it? Well, the government has set the starting rates. Fully electric cars will be charged around 3 pence for every mile they drive. Plug-in hybrids get a lower rate at 1.5 pence per mile. Now, to give you some perspective, the government's worked out that this is about half the equivalent rate that petrol and diesel drivers pay right now in fuel duty. So even with this new tax, EVs still have a big running cost advantage.
And you can see here how that adds up in the real world. For a typical UK driver doing around 8,500 miles a year, this new EVD will add about £255 to their annual bills. If you do a lot of miles, say 14,000, that goes up to £420. Oh, and did you know? At least when it starts, electric vans, trucks, and motorcycles are all going to be exempt from this pay-per-mile charge.
Okay, so we've talked about all the new costs. And it might sound like a bit of a downer, but the government knows it can't just pile on taxes without keeping the switch to electric an attractive option.
So now, let's pivot and talk about the silver lining, the really significant financial incentives and business perks that are still very much in play.
First up is the electric car grant. This is brilliant. It's a direct discount off the price of a new eligible EV right at the point of sale. And the really great news is the government has just pumped another £1.3 billion into this scheme, extending it all the way to 2030. That's a really clear sign they still want people to make the switch.
And the best part? The process couldn't be easier. You just pick an eligible car, usually one with a retail price under £37,000, and the dealer does all the work. The discount is just automatically taken off your final bill. No forms to fill out, no hassle at all.
Now, if you get a company car or you run a business with a fleet of vehicles, this is where the savings get absolutely massive. And this chart just brilliantly illustrates the biggest saving of all. Benefit in kind, or BIK tax, is what you pay on a perk like a company car. For an EV, that rate is just 3%. Now look at a typical petrol car, over 30%. It's a no-brainer. Plus, the government has confirmed these low rates will only rise gently to 5% by 2028, which gives businesses that crucial long-term financial certainty they need.
And the good news for businesses just keeps on coming. There's 100% business rates relief on new charge points for a whole decade. HMRC has brought in smarter mileage rates for employees, so they're not out of pocket. And there are still grants available to help install chargers at work. The message from the government is crystal clear. For businesses, going electric is still a fantastic, heavily incentivized move.
Whew, we have covered a lot of ground and a lot of numbers. So let's just take a moment to pull it all together. Think of this next part as your financial roadmap, just the most important figures and dates that you absolutely need to remember.
So, the crucial point is to lock these 3 dates into your memory. April 2025, that's the big one. It's when standard road tax starts for every EV owner and when that expensive car supplement kicks in for new EVs over 50 grand. Then, looking down the road, April 2028 is when the new pay-per-mile tax begins. These dates really define the new financial world for EV owners in the UK.
You know, understanding all these changes is one thing. But figuring out how they apply to your personal finances or your business situation, that's a whole other challenge. This new reality is just more complex, and making the right call really requires some careful planning and, frankly, some expert guidance.
Now, before we go any further, I have to say this. The information we've shared here is for general guidance only. It's designed to give you a really clear overview, but you shouldn't rely on it exclusively to make big financial decisions.
And that really brings us to the final critical question. With this new mix of costs on one hand and ongoing incentives on the other, how can you be absolutely certain that choosing or even just keeping an electric vehicle is still the right financial move for you? How do you balance it all out?
Well, the answer is simple. You get professional advice. Before making any decision, you must consult the tax experts at My Tax Accountant. Their team can provide personalized advice that's tailored to your exact situation. Whether you're a private owner, a freelancer in the city, or running a whole business fleet, contact them today. Their number is 0208-570-8531 and email is info@mytaxaccountant.co.uk. Thanks for tuning in.